This is one of the classic FinTech success stories of the past decade, and it's a good starting point for the course. Social Finance, which is commonly known as SoFi, is a San Francisco-based online personal finance company. As one of the early American FinTechs, they provide student loan refinancing, mortgages, personal loans, investing, and banking products. SoFi initially started out in 2011 by providing students with college loan refinancings and since has greatly expanded their services and offerings. Today, the company's stated mission is to help people achieve financial independence in order to realize their ambitions, and they are an excellent example of a FinTech filling in a need in the marketplace. SoFi was founded in 2011 by 4 Stanford Business School students who sought to provide more affordable lending options for students taking on debt to fund their education. Their initial loan program at Stanford was for $2 million and was funded by 40 alumni who invested an average of $20,000 to 100 students. Following early successes, in 2012, SoFi raised another $77 million. By 2013, they had funded $200 million in loans to 2,500 borrowers at more than 100 colleges across the country, and these were financed by a bond securitized by the student loans. According to Crunchbase, SoFi has had 13 successful funding rounds to date. However, after experiencing considerable growing pains in the mid-teens, Anthony Noto, the former COO of Twitter, became SoFi's CEO in 2018. He remains in that role today, and the FinTech unicorn is estimated to have a value in excess of $4 billion. SoFi is a financial institution that offers a number of loans and financial products, but it's not considered to be a traditional lender. What this basically means is that this FinTech doesn't operate like a normal bank. In fact, SoFi has advertised that this is the beginning of the bankless world. SoFi's users tend to agree that big banks are an antiquated approach to personal finance and are supporting this belief that there is a better way to bank online. SoFi has grown to now offer a full suite of financial products. Their apps are free and easy to navigate, and most millennials and digital-savvy financial consumers find their approach straightforward. Information is presented in a clean, easy-to-understand manner, and there are no concealed fees or hidden terms found in the small print. And they offer no-cost membership perks like career services and financial planning advice. On their online platform, as well as with their smartphone apps, SoFi offers SoFi Money, SoFi Invest, student loan refinancing, private student loans, personal loans, home loans, and SoFi Relay. SoFi Money is a cash management account that earns a saver the going money market rate on cash balances, and it has no account fees. After joining SoFi, the member gets account access and free ATM usage. SoFi Relay is a virtual money dashboard that summarizes account balances and transactions, including accounts outside of SoFi. It helps people manage their budget, credit score, and understand their monthly cash flows. Again, this is an offer that's free of charge. SoFi Invest lets an individual buy stocks, ETF, cryptocurrencies, and offers a managed portfolio or robo-advisor. Like Robinhood and other zero-commission firms, stocks and ETFs trade for free with SoFi and are available in fractional shares, which they call stock bits. Members can purchase partial shares in their SoFi Invest account, meaning that investors don't need to have the full share price for stocks and ETFs. This is handy if you're trying to buy some stock that sells for a very high price, such as, say, Berkshire Hathaway. Their robo or automated investing tool is also available through the Invest app. It functions similar to other robo-advising products on the market today. SoFi was founded as a lender, and today it has many different lending products, from student loan refinancing to mortgages to personal loans. These tend to be a good option for borrowers who make a decent income and have a good credit score. There's no origination fees, no late fees, and borrowers aren't penalized for paying off their balances early. There are many FinTech lenders in this space, and SoFi tends to be the best for those with a short credit history and with favorable credit card and payment experiences. The online process takes place completely virtually, from applying for a loan to receiving approval. The FinTech insurance industry is starting to take off, and SoFi is partnering with a number of the major insurtechs, such as Lemonade, Root, and Ladder, to offer their members different insurance offerings. In an effort to offer more services, SoFi has been active building and attempting to have a number of benefits for their members, most notably free career coaching and financial planning services, which is catering to the millennial and Gen Z crowd. They are looking to release a credit card at some point soon, as they recently announced a partnership with MasterCard. And according to an interview given lately, SoFi wants to build itself into the financial services powerhouse for the millennial age. As we'll continue to see, there are plenty of FinTech competitors for SoFi. It is not likely that big tech or big banks will sit idly by and watch the upstarts take away their market share. SoFi's story has been positive to date, but it's likely that there will be significant competitive challenges ahead. SoFi was more successful than most banks in helping to funnel loan applications to lenders for the COVID-19 Paycheck Protection Program, or PPP, which was established by the CARES Act in 2020. Through SoFi's Lantern, they helped their applicants get matched with a network of SBA lenders. The SoFi Lantern offering made it easier for applicants to search across different financing options, including SBA programs, private small business financing options, and personal loans to find funding. This was an example of where the speed and efficiency of online fintechs bested traditional brick-and-mortar banks. This recent experience bodes well for the fintechs, such as SoFi, moving forward. And even during the crisis, SoFi acquired Galileo, a fintech payments firm, for over $1 billion, and a Hong Kong-based investment app, 8 Securities, offering proof that fintechs were not adversely affected by the coronavirus. The future remains bright for fintechs like SoFi.